So the end of days is coming. Economic Armageddon is fast approaching. And on this channel, we have seen this coming. Now everyone here is like Neo. We have seen through the code of the Matrix. We have been dodging the BS for 3 years now. And Agent Besson is in trouble and there's no way he can spin his way out of this one. The US jobs report is out and good lord is it horrific. We are witnessing the downfall of the economy triggered by Trump's trade war. People are broke and companies are starting to fire people. August payrolls have come in at just 22,000 jobs, and in June the number was negative. Notice the trend here. Ever since the trade war began, job growth has been falling off a cliff. What about job retention? It's looking horrific and we are entering a recessionary environment here. Unemployment came in at 4.5%, wage growth is also stagnating when inflation is still high. This is the danger zone we are talking about. Here's the issue. It isn't just one sector that's getting clobbered, it's finance, manufacturing, tech jobs, and even government positions. This is a white collar and a blue collar bloodbath. And this report almost guarantees a major reaction from the Federal Reserve. There's no room left for hesitation, and we are, of course, talking about massive rate cuts to save the economy. Now, I'm not saying this is going to work. In a majority of cases, rate cuts always come too late and the economy shortly rolls over into a recession. But this is the only lever left that power can pull. And here's how insane the market is preparing for rate cuts from the Fed. And they are meeting on the 17th. Firstly, there's a 100% chance of a rate cut. There's an 88% chance of at least one mini cut coming in 10 days' time. And there's a 12% odds of a double rate cut. The Fed could do a jumbo cut of 50 basis points. And that's hitting the panic button, but really help save the US economy. And here's the problem with rate cuts. It's always reactionary. Now, history has shown us this multiple times and the damage from the tariff war has already been done. However, even today, Besson still denies hurting the economy. He believes this shell game of shifting money from US consumers to the federal government is the best thing since sliced bread.
Every 300 billion is 1% of GDP. We got left with a mess in terms of the deficit to GDP, the highest ever when we weren't in a recession, weren't at war. So just with the tariff income, we're going to be in the fives, which is incredible. Like that's like running a marathon and starting 5 miles before everybody else.
Now, sure, maybe $300 billion adds 1% to GDP, but this is growth being taken away from US consumers into the treasury. It's a private sector bailout to help fund Trump's economic fantasy. So now people have less money to spend in the real economy. As a result, companies are now forced to slash away their workers. People are not only finding it tough to find work, existing jobs are being cut away. Now, this is the payrolls chart, and normally we should see everything in green. There should be job gains every single month. After all, the US government is spending money like drunken sailors, aren't they? But in June, the revision just revealed the truth. The US has officially lost 13,000 jobs, the first negative print since July 2021. Now, the rate cut or jumbo cut is now baked into the cake. There's no way out. The tariff war is taking real effect on the economy. Now, what happens when you decide to cut interest rates during a tariff war? Really think about this. You put another nail in the dollar's coffin. Demand for the reserve currency is already so low, but now you want to take away an incentive to hold dollars? Now, normally during a recession, there would be a run to the U.S.D, but things are vastly different today. The world economy, especially in Asia, is humming along. The US economy, however, is getting isolated day by day. So we could be in a situation where the US economy crashes, but yet bonds sell off, triggering yet another blow to the dollar. It's against conventional money flows, but we saw this disaster back in April. Now the dollar now heads for its fifth weekly loss thanks to the jobs mess. Spot index fell by 0.7%, and in total, year to date, the currency is down by nearly 10%. Now the incentive to hold US bonds has dropped. Foreign holders of US equities just got bamboozled. But worst of all, inflation for Americans is creeping up thanks to the falling dollar. And now Wall Street smells weakness. All the hedge funds out there, all the speculators were swarming like sharks and start to short the dollar. And that just feeds into a plunge even more. Now, sure, some money might flow into US bonds, but those will be at the shorter end of the curve. It's just a knee jerk reaction. We could still see long bond yields stay stubbornly high because holding them is like hugging a barrel of toxic waste. It might feel nice and warm, but your holdings will melt away in real time. And here's why inflation, real inflation, will be a forever crisis in the US. Now, the last time the Fed cut interest rates with CPI above 3% was in the 1990s. Today, inflation is above 3%, and the Fed is moving to cut in 10 days' time. And what do you think this is going to do? As we said years ago, the 2% inflation target was BS because now there's upwards pressure on prices. The new baseline is going to be much higher than 2%. And all these data points to stagflation. Economic growth is slowing, inflation is rising, and unemployment is heading up. This is not a good economic environment for US assets. And should things get nasty enough, the threat of foreigners dumping dollars or bonds is extreme. The exposure is huge and it's a key pillar holding up the entire US economy. Now, Trump needs foreign money to fund his global tariff war. Really go figure. In 2020, foreign holdings of US debt stood at $7.3 trillion dollars, or 35% of total bonds issued. But look at how things are progressing over the years. December 2024 saw foreigners hold 8.5 trillion. Yes, the absolute amount has increased, but this is only 30% of total US outstanding debt. As foreign demand starts to drop, a whole host of nasty effects gets triggered. Now Americans themselves or US banks have to absorb the additional supply. But do they have the money when Trump is shaking them down with his tariff war? With foreign buyers running away, this also puts upwards pressure on bond yields. So the Fed rate cuts are now nullified. They aren't as effective as before. Now, a good question we get is where will the money flow to? If rate cuts come, that means the dollar might plunge dramatically. That would obviously nuke the value of all bondholders. Well, central banks themselves have already figured out the answer. They are dumping their dollar holdings for gold, and we have reached a historic moment decades in the making. Foreign central banks today are holding more gold than US Treasury bonds. The last time this happened was in 1996. Gold is now 30% of total foreign reserves, while US Treasuries have fallen down to 25%. And not many people know this, and this is why the gold bull rally is still relatively under the radar. If the dollar continues to fall, do you think central banks will want to hold more US paper or gold? Very simple question here. Now, you would think Trump or Besson would be in panic mode, but even after the jobs disaster, they are still cracking jokes in the White House. It's really nuts.
Kevin, would you like to say a few
Sure.
words?
Mr. President, I think this G20 meeting, where the world leaders will come to the great city of Miami, is going to be viewed as one of the most important meetings in global history, because what's going to happen is the golden age is going to be documented so well in the data by next summer that you're going to have one of the best speeches written for you that you've ever seen, because we're just going to be talking about the accomplishments of the next year.
I think so. A lot of these plants are going to be open by then.
Yeah, exactly.
And a lot of jobs there.
Maybe that's why the dollar is burning down in real time. The tariff war is not going to stop, and everyone in the Oval Office, they are 100% convinced of ultimate victory. But that makes things a lot easier for you and me. If that's the direction, then we all need to look elsewhere. As the dollar plunges, gold is soaring to the moon. Gold futures rallied all the way to 36.50, which is an astounding new record high. Confidence in the dollar has collapsed, and investors, they are running into gold bullion. Now, since the days of Greenspan, gold has been a counterweight to the dollar, and he admitted it. A higher gold price signals inflation out of control and unbridled government spending. Gold is sniffing out the true story here. People know that the Trump administration is trapped. Besson needs to keep borrowing money, rates have to be lowered, and all of this points to the plunging dollar. And the story gets even wilder. A major US bank just came out with a wild forecast. They see the writing on the wall and they are veering towards more US reputational damage. According to Goldman, the price of gold hitting $5,000 is entirely possible. There are two big dominoes that could contribute to this, and the first is the collapse of Fed independence. And this would lead to higher inflation, lower bond prices on the long end, and a severe erosion of the dollar's reserve status. Does that sound familiar? All of the above has happened in the past few months. It's already happening. This is the consequence of Trump's trade war and trying desperately to replace Jerome Powell. How about the $5,000 gold forecast? Now, where's that coming from? Goldman is projecting money flowing directly out of US Treasuries into the gold market. A big tsunami of cash trying to cram itself into a market 10 or 15 times smaller than US bonds. Higher demand and a fixed supply leads to the obvious gold prices flying to the moon. Now, if 1% of privately owned US Treasuries flow into gold, the price would rise to nearly $5,000 an ounce. Gold remains our highest conviction long recommendation in commodities. And notice the language here privately owned US Treasuries, so they aren't even counting on governments dumping their bond holdings for gold bullion. And that is another tailwind not being accounted for. What have we seen in the recent SEO summit? China, Russia, and India coming together. And as they begin to trade more with each other, the odds of using dollars are slim to none. And if that's the case, holding US bonds is less likely, and a big part of their reserves or surplus will probably flow into gold. So, is the situation bad for the US economy? Yes, without a doubt. But will this disaster continue? It probably will because Trump can't do a U turn now. His strongman persona refuses to back down. And at this point, even I have no idea what's going on in Trump's brain. He refuses to see what's happening. Whether it's in the economy or geopolitics, nothing makes sense anymore. And this is what the commander in chief wrote about the recent SEO summit. Looks like we've lost India and Russia to deepest, darkest China. May they have a long and prosperous future together. Is this an admission of defeat or the US doesn't care about it? It's confusing, it's truly confounding. We are deep in the twilight zone. You literally can't take the White House seriously anymore. Do you think the dream team really has a plan to save the dollar? Honestly, I don't think so. Everything is on autopilot now, and there's simply no going back. But let me know what you think. Will the US economy continue to tank further? And is there any way left to U turn the dollar collapse? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.